So there's a lot of people with a lot of money that still doesn't use a bank or a financial institution, whether it's because of the pricing, whether it's because it's non-Sharia compliant, whether it's because they don't trust the transparency behind those organizations, where the money is going to, where it's coming from. They're just not educated enough to understand all of this. And that's, if they don't understand something, they don't trust it fully. I believe default rates in the digitized version, I think, is even lower than the offline world, because it's a myth that people think that offline ROSCAs are like completely safe because they're
not at all. I know they're not.
It's in India in specific. There are like lots of scams that because it's very limited. It's very tough to find a circle that is relevant to how much you want and when. So you end up going to someone who knows someone that is in a group. It's very private, so people don't like it. But again, it's their only option, so they end up doing it anyways. So I believe our model with the collection, with the legal, with the credit assessment and how much they get and when, and the peer pressure that we apply in the product and so on, makes it even safer than even the offline world.
Joining me on the couch today is Ahmed Wadi. Ahmed is the founder and CEO of a company called Money Fellows.
When I first thought of this model, I thought it's very viral. You get one customer, the customer gets you 10 friends. It's extremely viral. You make a lot of money, but
and that's not the case.
It didn't make sense.
And that's what I was thinking. Is it that's how it worked? Do you go to Arjun and Arjun says, "Oh, let me create a circle. Give me the."
This was how we launched, and then it didn't work. It failed completely.
Welcome to today's episode of Couchonomics with Arjun. Joining me on the couch today, all the way from Egypt, or sometimes what I like to call from the land of the pharaohs, is Ahmed Wadi. Ahmed is the founder and CEO of a company called Money Fellows. Every time I think about Money Fellows, the movie Goodfellas comes into mind. Don't ask me why. But with that, I'll welcome Ahmed. Ahmed, thank you for flying all the way down from Egypt. I'm sure you didn't fly for the episode, but just to make
a big part of it. It's a pleasure to be here.
Thank you.
Been watching Couchonomics for the past few episodes. Big fan. So pleasure to be here.
No, appreciate it. And we met recently. We met in Marrakesh.
Yes.
We met, I guess, accidentally, you would say so. I think there was
GITEX. It was a big event
by GITEX, and I think it was thrown by Algebra Ventures, right?
Exactly. Yeah, there was a lot of side events, and Algebra was thrown.
So it was a pleasure to meet you, and thank you for making time. So I guess as we were speaking prior to the event, right? The purpose behind this podcast is it's multifaceted, right? The audience wants to hear more about what Money Fellows is. We want to hear a little bit about your own journey as a founder. We'll talk a little bit about Egypt itself and how things are evolving in Egypt and the fintech scene. I want to talk a little bit about financial inclusion. What are the things you guys are doing differently, and so on and so forth. So It's a conversation, right? Yes, there are some questions that I write, but I usually don't make through them. But let me ask the first question: what is Money Fellows, and where did the idea come from?
Well, great. So Money Fellows is basically a very interesting concept that's been there for hundreds of years. So not Money Fellows, the concept of which we digitized, have been quite common for actually thousands of years. It's a very old model, way before banks and credit scores has even existed back in the days. And it's a way of how people usually bank in groups. So they pool money together to reach their financial goals and needs. How it works is usually a group of friends, family members, work colleagues. They join together. They all agree to pay like a fixed monthly installment into a common pot. So let's say for 10 members, each paying $100, there's $1,000 at the end of the month, and then Arjun gets it. So this is a pure borrowing experience without having to rely on other alternative options, but rather rely on your social graph and network and so on. And then again, next month, everyone again pays another 100, there's another 1,000, and then it keeps rotating up until, everyone receives their payout. The ones getting the money at the beginning are the borrowers. The ones in the middle are the hybrid. They're both borrowing and saving at the same time. And the ones at the end, those who waits, so chips in, 10 months of installments and gets it towards the end of the cycle, are the savers in that circle.
And if I pronounce it correctly, it's called Gameya.
In the Arab world, they call it Gameya.
Chit fund in the...
Exact. Chit and not. So chit funds
chit funds in India.
In India, committees in Pakistan, tandas in Mexico, SACCOs in Africa. So it's known in over 90 countries around the world, been there for years, and it's never been digitized before. So Money Fellows came to digitize this model.
So I'm going to come to in a second on Money Fellows digitized, and then I'm going to ask you how you did it. But just as a question, you're a young man. This is an old concept, and it's actually, if I'm not wrong, it's mostly a rural concept, or with, I would say, the lower income segment, which were not in the financially included segment.
Yeah.
Where did the idea come from for you to basically say that this is something I want to do?
So this is quite a myth, to be honest. I mean, in some countries, yes, it's true. It's usually for the poor, the unbanked. But in many other cultures, it's more of a tradition. Yeah, it's so people grow up seeing this, doing it. It's it builds up saving and spending habits. There's also a social component in it, of which you're helping other members reach the financial goals and needs. So it's not necessarily driven by a real need. It's actually more of a culture in many cultures and countries around the world. But it's true, there are so many countries that it's usually for the unbanked population because they don't have any other option. Usually banks wouldn't offer them facilities, attractive saving options, and any other financial institution wouldn't really target this type of segment. So this is where they resort to such a solution. So how the idea came up to me, I actually lived in Germany. I studied there for quite some time. I also worked there, and at some point I wanted to access credit myself, and being new to Germany, so I wasn't born there, so you need a very long period of time to actually build up your credit score to a certain level where you can get hundreds of thousands and so on. But if you're quite new, there hasn't been a lot of financial footprint, especially in the credit space. It takes you a very long time. So for me, I tried to find alternative options. What are the possibilities? Instead of rather asking someone to lend me purely, I started thinking, okay, what could other options be? And memories came up to me when I've always seen this concept across family and friends and neighbors and work colleagues and so on. So I've came across this, and I've seen it a lot historically. I never participated back then in a ROSCA, but I thought, why not? But being in Germany, it was very tough to actually find one back in Germany. So I ended up trying to find, a group of members in which I can join a ROSCA with back home. So it took a very long time to just find one. And then it was very painful to keep track of the payment. I used to transfer money with the, likes of Western Union and so on. A very big chunk of the payment used to go to in fees. And so it was a very bad experience, and I almost regretted joining a ROSCA being abroad. So I thought we're in 2016 or whatever, and I think why can't it be modernized, and why can't it be digitized? And the original idea was, why can't I, being in Germany, join a ROSCA or a Jam'iyya or a chit fund with people in Egypt or India or whatever? So this was really the original idea. And I'm a computer engineer myself. I started building a prototype. But I knew Germany wasn't the right place, so we started actually in the UK.
Oh, wow. Okay. So Money Fellows started in the UK.
Yeah.
And hence the name Money Fellows.
Exactly. Yeah. Okay. So the origin. Yeah. So we thought, okay,
because it's a very Western name. If
exactly. It was more Western, and then we just didn't change it when we went back to Egypt. I know we faced a lot of challenges until today. People call us money filous, money flowers, money, so, but people find this one way or the other. Yeah.
Okay. And so when you said you digitized it, right? Yeah. I can understand the collection and the disbursement side of it, right? But there are a number of other elements, and I'm no expert on chit fund, and to be honest, I've never participated in one. So please, if I don't come across as informed, it's just because I'm not. But there are a couple of sort of interesting angles. One is that you can choose to make it your own turn by opting in, and there's a cost associated with it, or you forego some amount of money. There's also been cases I know very much in cases in India where some members have just vanished, right, with numbers. Yeah. So So by digitizing it, are you just purely are you solving for some of the inherent problems that existed in, I guess if I
In
just call it
existing
chip?
ROSCAs, yeah.
Yeah.
So I think that's one. So offline, so the original word, instead of saying Gamaya or chit funds, they call it ROSCAs, rotating savings and credit associations.
Right.
So in the offline ROSCA world, it's actually very, very painful. Yeah. So it's extremely tough to find a ROSCA to participate and with the exact amount and time that you're looking for. So you barely find a ROSCA with participants that are all very happy about the amount they're getting and the slot they're choosing. Yeah, but at the end of the day, that's their only option, so they end up just accepting that. And then there's a lot of management. So there's usually a volunteer or two that runs after people to collect money and reminds them. So there's a lot of logistics. They do it on a piece of paper.
Yes.
To keep track, and so it's very, very painful. But the pain of not being able to access credit, or the pain of not being able to find attractive saving options and so on, is even more painful. So people still end up, doing a slightly less painful model in the offline world, such as ROSCA. So this is one of the USPs that we offer, is resolving all of those pains of existing offline ROSCAs and digitizing it completely. So people now don't need to worry about who they're joining with. So it's a big network. So they don't need to find, a group of members to convince them to join different months and slots and amounts and so on. We manage all of this. So it's a network effect thing. So the larger that network is, the user simply tells us how much they want and when. And if they're eligible for that, we do like a credit check as well. If they're eligible to that specific amount and slot, we end up accepting that and linking them with a group of members outside their social graph.
And are you guys a regulated activity?
So we had to shape our own regulations. In a country like Egypt, it was very tough. So generally, ROSCAs across the world isn't regulated. And that's one of the challenges we faced when we first launched the model, because we're not microfinance, we're not consumer, we're not a bank, we're a mix of everything. So in one ROSCA, there's the lending, there's the saving, and there's the deposit taking, and so it's a mix of everything. So we had to shape our own regulations, and we're glad to be the first, I think, globally, to ever get a temp license and set a whole set of controls and parameters tailored for such a model in Egypt. And what we're trying to do now is replicate that across and work closely with other regulators in similar cultures to expand and copy that as well.
Okay, so here's a question. If we take a step back, right? So financial inclusion is front and center for most regulators in most large countries where there is a diversified income base, right? And Egypt is no different.
Exactly.
Right. Correct me if I'm wrong, but most regulators are driving financial inclusion through digital payments or through easy availability of bank licensing or through, wage protection systems and prepaid cards and so on and so forth. Right. So is there a tsunami heading in your direction which is reducing your market size, right? Or are you seeing the ROSCA market also grow at the same time as financial inclusion is being tried? Because to me, with all due respect, it looks like it's a zero-sum game, right? If more and more people come into the official sort of banking environment, arguably they get access to credit, although that's not true. Just because you have a bank account doesn't mean you get credit, but let's assume that. So how do you see the market shifting going forward? Do you see this concept continue to exist? Because as you said, it's a social norm, so it will never go away, right? Or do you see this sort of reducing, and you will eventually turn out and become some sort of a P2P? Well, you're already a P2P platform, if in all due respect, or you'll become some sort of a bank.
No, it makes sense. So I think payments isn't necessarily purely financial inclusion.
No, it's not.
I think it's a certain use case that people look to, and I think regulators and governments are usually using payments as an infrastructure and not necessarily the end use case to financially include people. Yeah. So we need to know what people are looking for. So payments is just a channel to use all of the and digitized services generally, and that's advantage that we're actively growing at the same time where payments is also sort of picking up in a country like Egypt and many emerging markets. But I think our use case is extremely relevant and they relate to it a lot. So bank loans, so there's a lot of people with a lot of money that still doesn't use a bank or a financial institution, whether it's because of the pricing, whether it's because it's non-Sharia compliant, whether it's because they don't trust the transparency behind those organizations, where the money is going to, where it's coming from. They're just not educated enough to understand all of this. And that's, if they don't understand something, they don't trust it fully. Yeah. It doesn't mean that it's not trustworthy. It's 100% trustworthy. But again, they don't get it. They don't understand. So there's a lot of education that needs to be done there. And there's no trust and more transparency beyond seeing and knowing where this money is coming from. It's pooling between people. It's a social effect. People, that pool is actually for people to get married, travel, purchase products and so on. So there's so much transparency in ROSCAs. And at the end of the day, it offers almost the same use case that any of those institutions would offer, but in a way that is social, culturally favorable, affordable. And affordable because we don't have a high cost of capital. We don't need to borrow to lend people. It's usually pooled by people. So we don't end up being too involved in the in a ROSCA to finance all of those people, whether it's saving, lending and so on. So we offer very reasonable prices. We make very good margins.
So how do you make margins, if I may? So what is the economic model, if I may ask?
We charge a service fee depending on the user's selected slot. So the very first person to receive the payout is a pure borrower. So that's the highest fee. And then the second one, so basically the month 2 is slightly cheaper. So the longer the user is willing to wait, the cheaper it gets, up until it becomes at some point a neutral slot. So in a 10-month circle, slot number 6 is almost equally a borrower and a saver. So it's a 0 fee slot. And then it becomes a negative fee where we actually give more to those who saves money. So
people who are net providers,
exactly,
for the first, let's say 6, 7, 8 months,
exactly,
actually
get more money. So it's like a saving incentive for those who takes the money at the end of the day, at the end of the ROSCA itself. And if you compare a slot by slot on a fee or an incentive basis, it's actually very, very attractive. But we generate revenue from all of those slots and not just one. So for the customer, they're joining one slot, they're getting a very reasonable fee. But from a circle economics or a ROSCA economics, we actually make money from the first, the second, the third, the fourth, and they're all also helping us with the cash flow as well. So they're sort of supporting that so that we don't have to borrow money at times where interest rates are extremely high as well. So the overall economics of how ROSCAs operate is actually very, very attractive, very transparent, very cultural, very social. So that's why people still continue to use such a use case. They relate to it when you tell them it's a digital jam'iyya. They know what a jam'iyya is. They know their grandparents, their mother, their father. And a lot of parents used to educate their children to join a ROSCA versus borrow money and so on, because it helps promote spending and saving habits versus other models that are
one or the other.
As soon as you need money, you're in debt and very high interest rates and so on. So it doesn't necessarily promote good spending and saving habits all the time.
Okay. So that begs the question, right? Then so where is most of your competition coming from? So is it other people who are basically digitizing other gamaiyas, as you call it, or let me ask a very simple question. Out of the entire ROSCA market, what percentage of it today, just roughly in Egypt just alone, is now digitized versus still running on the traditional wheels?
Yeah. In Egypt in specific, so I think we're by far the largest, and I think we're by far the largest globally that ever digitized ROSCAs. There has been a lot of trials from even major players, banks, telcos, and so on, but the product is very, very complex. And it takes a very long time to actually nail down and perfect the operations tech and so on. So in Egypt, we have activated over like 600,000 since inception, paying
Participants.
customers.
Right. Okay.
And I think the total addressable markets of ROSCA only participants is around 33 million Egyptians. So that's a fraction of what we can actually still manage to acquire. The thing is that we've been always looking to grow at a sustainable manner, and versus just boost and grow exponentially without having to perfect the economics, the product, and so on, because it's a very sensitive product. Anything that could go wrong would actually hurt a lot the credibility we've been working hard to build. So I think there's still so much room for us to still grow in Egypt alone.
Okay, let's switch a little bit. Let me get a bit of a view on your view on Egypt as a place for a burgeoning startup or a fintech founder, right? Tell me, how have you seen the Egyptian sort of fintech market evolve over the last sort of 4 to 5 years? What have been the winds of change, right?
Yeah.
What's working in your favor? What are the big challenges as a fintech founder?
So I think when we first started, Money Fellows so we launched in 2018 in Egypt, and I think there was a lot of missing normal pieces. So payments wasn't that advanced. I think it was very tough to just collect payments from customers. Yeah. And for such a model, we need to make sure we get their payments on time, because we need to pay out customers on time. So it breaks the whole cycle if we don't have the basic infrastructure solid enough. And I think in a very short period, there has been so much that has been done in the payment space. I think the market is now almost so very, very saturated with all of the different payment channels you can imagine, whether on mobile wallets, card, prepaid, POSs, agent networks, and so on. So I think this has been like picking up well, and it's been in our favor. I think there's a lot of infrastructural things that's still missing, like eKYC, like e-signature. These are basic stuff that I think so many other countries have managed to, break through and digitize. But in Egypt, I think we haven't fully done it yet. There has been some good signs.
So lately. How do you scale? Because your business is scale based, right? You got to reach. Egypt's not a small country.
Yeah.
So how are you solving for eKYC, for e-signatures? Because are you doing it all physically, or
exactly?
Are you just...
Yeah. So this is the only friction point that we have in terms of the overall customer journey. So everything is fully digitized, except for that contract signature piece and KYC, which we blend in one visit. Yeah. So every customer needs to do one physical signature, and so a wet signature, and during that visit we also take a copy of the KYC of the document, the identities, and so on, and the address verification and so on. So this isn't necessarily in a country like Egypt very costly. So I think and
you do it all yourself? You're not leveraging any third-party
we
networks?
Actually do. No, so we have two parts. One, because this is a very sensitive and very important step in the customer's journey, KYC, AML, and checks, and so on. So I think 80% of the visits are actually done by our trained employees and so on. And then there's a buffer of 20% that we also keep to outsource, not necessarily only for the contract signature piece, but there's renewals of stuff. But usually the first visit is done through our own agents. We have hubs across Egypt to manage to get the contract signed within a certain SLA, so 1 day maximum. And I think in Egypt it's actually quite doable. It also gives protection to the customer. Customers usually feel more comfortable when someone comes to their office space or home address, gets them to sign, which protects their right and our right. So even if eKYC and e-signature was available, I think customers usually want to actually meet someone, talk to them, sign something physically, and so on. So it's also giving us the ability to give them enough credibility and trust for now. But I think it's very necessary to start educating the market and launching such initiatives, and then start educating them that their rights are almost equal when they sign wet signature or an e-signature.
So again, I'm going to come back to this regulatory question, because what I'm hearing is that is it's solving a real problem, right? It's hugely popular because I think what Egypt's 100 million people, give or take, right? You take the youth out of it, so I guess the net addressable 70 odd million. So nearly half the country is part of the TAM, right? Part of the TAM.
Exactly.
And you have self-regulated yourself. In my view, that's code of ethics, which you've kind of written. Is that jointly, is there like an industry body you guys have created and you're all complying to this? Or is this just Money Fellows itself, code of ethics or policies that you're complying with?
No, so we initially, there were two regulators in Egypt, the FRA and the Central Bank of Egypt, and normally any non-banking financial institution goes to the FRA to become regulated. But in our scenario, after so many committees back and forth and so on, CBE related this model more to them versus the financial regulatory authority. So we're now regulated by the Central Bank of Egypt, and we joined the sandbox, and then we're in the graduation phase with the temp license.
Okay, and you're still in the sandbox?
We haven't officially got the temp license. It's about to announce, I think, in an upcoming event.
I misunderstood that in the front end. So it is getting regulated, and that's fine. And I'm assuming this eKYC issue is not just yours, because I've had some other guests here, and they've raised this concern. So I guess this will get eventually resolved.
It will. And I think the Financial Regulatory Authority has already done a few policies to actually allow eKYC for now, and with some of the regulated FRA models. And so I think CBE will also follow. There's a digital bank license being approved now with one of the largest banks in Egypt. So one of the biggest components of digital banks is to onboard customers digitally. Exactly. So I think eKYC is a big part of that.
So coming back to just growing the core proposition, right? So the core proposition remains what it remains, which is, you're facilitating the movement of money within a collective. Some are borrowers, some are lenders. I get that. And you've got 600,000 people. You can possibly get 33 million. You'll continue to grow, right? What other value-added opportunities are you seeing in this? From both from serving the customer better, but also from a Money Fellows perspective, to sort of add more value by the digitization process that you've undergone. So, are you looking at any diversification?
100%. So we're actually. So I can make use of this. So I think by the time this episode will be published, we'd actually have a prepaid card launched publicly in the market. The prepaid card is a complementary product that allows people to receive their payouts, but it's also for non-ROSCA participants, and it has so they have full visibility and control over the card. But the card can become a channel to financially include people. So if you onboard people paying through cash through POS machine, you can sort of force them to receive their money on a prepaid card, and the next use of ROSCAs. We have a very high retention rate. So the next time they join a ROSCA, we can sort of incentivize them to pay using that card as well. So using a use case that they are used to see, it's very cultural, we manage to also automatically sort of onboard them.
Plus makes spending easy for them, right? So
makes
when they receive
spending,
the money,
they get loyalty on merchants, and it's a better experience. It becomes a wallet. And so I think it adds a lot of so it makes a lot of sense, and we don't launch products just to monetize and so on. We actually launch products that make so much sense for the customer experience at the end of the day. We're also about to launch an investment product, so people can choose to keep their money instead of receiving their payouts, and further invest it in T-bills and money market funds and so on. So that's also
so you'll be connecting with a third
with
party,
an asset
manager.
Yeah.
Right. and that's a separate entity, or is that Money Fellows now launching a whole?
Yeah. So there are some products that we probably need to do, like a third entity, a JV or a SPV or whatever. So in that sense, so it depends on the regulatory requirement, but in many cases we can just become an agent to one of the companies and partner with them. So it's sort of like just white labeling their solutions and putting them on our app. The whole point is to offer the services customers would benefit from, and that makes sense to the overall journey at the end of the day.
And I can see it's quite interesting, right? You should start to build quite big ecosystems. I'm going to come back to a point I had, because you made a very interesting point that you're one of the largest in the world in terms of what you've done in digitization. What I do want to ask you is, what's happened to the big countries, right? Because from a population perspective. But let's come back to Egypt. We didn't finish I interrupted you, I'm sorry. So you were talking about some of the challenges that you have as a fintech in Egypt. We obviously talked about the advancement in KYC and eKYC. What other challenges are you as a startup founder experiencing today? Regulatory, non-regulatory, talent, so on and so forth.
So I think one was not necessarily Egypt related. I think our model didn't have enough benchmarks. It's not easier, but it's always good to see where others failed, where others succeeded, how others do it from a user experience, from a product, from an operation. You can hire people from here and there. And so in our model, we had to sort everything out from scratch. So we had to go through all the failures ourselves and manage to overcome them. And most of the failures we fell into were product related, tech related, and not business related updates. So problems. So I think we had to.
And why is the case? Because you have a ready-made market. You can
the offline world is there, but when you digitize something.
But why haven't more people entered this world?
Because it's very, very, very tough. So one of the challenges, for example, is so we launch around 60,000 new circles every month. Okay. In order for you to fill in every circle, there is just like any marketplace. So Uber or Careem has the drivers and riders side. So they need to equally, they need to reach this equilibrium phase where there's enough drivers for those amount of riders. Yeah. In our case, every single circle we launch, we need to get enough borrowers, savers, planners in that circle for it to be fully completed. Yeah. So, and they're all like complete different personas.
And how do you orchestrate that? So how do you decide?
So there's so many things. So from eligibility, pricing, recommendation engine, how many circles to launch, who sees what. So there's so many logics running to manage to drive traffic towards certain slots that we are trying to fill, but also make sense to the customer. And accordingly, we target people based on their persona, based on the inventory that is available, versus just target a pool of members that is irrelevant to the inventory every single minute throughout the month that we launch circles to be fully completed. So it's a very complex product. People don't get to see that. It's when I first thought of this model, I thought it's very viral. You get one customer, the customer gets you 10 friends. It's extremely viral. You make a lot of money, but
that's not the case.
It didn't make sense.
And that's what I was thinking. Is it that's how it worked? Do you go to Arjun and Arjun says, "Oh, let me create a circle. Give me the."
This was how we launched, and then it didn't work. It failed completely. And I think there's so many trials that also thought the same. And this is where it's not an attractive value proposition to tell people, get your friends, guarantee them, manage it, but we're just a bookkeeping app. You just.
What do you mean by guarantee it? So how who guarantees? So once the money's in that circle, who's ensuring? Is there a guarantor?
We are.
So you guarantee the fact that if Arjun runs away, with the money. Exactly. Money Fellows is accountable?
Exactly. We connect people that don't know each other.
Yeah, I understand.
And we do assess their financial health and capacity based on, income, where they live, what they own, and whatever. So we do all of this so that at the end of the day, we tell people, don't worry. If anything goes wrong, we chip in. We're behind your back. And
so you
get your money anyways.
Both contribution. Exactly. Because when it might come to the next month and I don't have the money to contribute.
Exactly.
So you will contribute on behalf of me?
Exactly, yeah. So we add like penalties. There's a legally binding contract. We have a whole collection cycle. And so it's just like any lender out there. There's a process to collect your money, and there's a legally binding contract and so on. So we take that track, but we don't let the customer wait until we take action and until that customer pays. So we chip in, and that's why we keep reserves
And that's what I'm saying, right? So this is very interesting because you're not just an orchestrator now. You actually need a balance sheet.
A balance sheet to not to finance the circles, but to guarantee it. So it's an insurance product in a way. It's not a lending balance sheet.
But how do you then fill the money in? Because if I can't put the money in a circle, have to.
So there's a certain threshold, and our default rates are very, very low. Because again, the risk of slot number 1 is different than slot number 5. Is different. There's zero risk at slot number 10. So in a cycle, we don't need to guarantee everyone. Yeah. So there's like 10 members. We need to sort of make sure that the first 3 are the ones.
Yeah, I was going to say. Yeah.
And that's why we're more conservative. We don't limit people to amounts alone. We also limit them to the slots they can join. So we tell you, okay, you want 100,000. You're a new customer. You're eligible starting slot number 3 onwards. So, and usually those who want to default on purpose are very impatient. So they wouldn't want to pay for 3 or 4 months and then default on whatever is remaining and get into a legal action and so on. So it repels those type of customers. It repels the customers that are in urgent need of cash and willing to pay 50% interest rate. So all of those type of personas are actually not necessarily Money Fellows customers. And that's why it's also social. There's peer pressure. It's not as high as the offline world, but there is a certain threshold of social component. People know where the money is going to, where it's coming from. So they sometimes see that, okay, I'm a Vodafone employee. There's another member in the same cycle that is also a Vodafone, although they don't know each other, but they relate to each other.
Yeah, it's very interesting, right? Because I would have thought, and obviously wrongly, I would have thought that if the circle was among people, all of whom knew each other, that peer pressure would be more evident. And that's pretty much how it works in the offline world, right? Because you don't stand in the middle of the street and shout and someone joins it. But what you're saying is that the science that you're bringing in terms of slotting Arjun, where he should be slotted, actually guarantees a greater or a lower default rate.
Exactly. And I believe default rates in the digitized version, I think, is even lower than the offline world, because it's a myth that people think that offline ROSCAs are like completely safe because they're
not at all. I know that now.
It's in India in specific. There are like lots of scams that because it's very limited. It's very tough to find a circle that is relevant to how much you want and when. So you end up going to someone who knows someone that is in a group. So it's not necessarily always a group of friends and family that are very close, together and so on. So it's not, plus it's very private. So people don't like it, but again, it's their only option. So they end up doing it anyways. So I believe our model with the collection, with the legal, with the, the credit assessment and how much they get and when, and the peer pressure that we apply in the product and so on, makes it even safer than even the offline world.
So let's ask about Money Fellows expansion, cross-border. So I see you as, there's 3 parts to your business, if I may oversimplify, and you'll obviously correct me. There's the whole technology, let's call it a platform for the sake of argument, right? There's a platform which allows you to build these circles. There is a way you do the KYC, possibly AML. You bring them through some sort of science, you slot us in. Let's assume that's one big sort of platform, right? That's one part of the business. There's obviously this adjacency of services that sit next to it, which it takes care of, in your case, 2 ends. One is the KYC, because that's still manual, but let's assume that gets automated. There's also the collection side of it, right? Which might be completely remote, or might have a combination of remote and physical, but there is some orchestration which is required, maybe if they're not even those people. And then there's this third, call it insurance, call it financing, whatever we are thinking. Do you see your growth in the future in other markets as Money Fellows, the technology provider, or picking and replicating the same business again and again and again everywhere? Because I would imagine if your technology is as good as you claim it to be, and you believe that the problem is as complex as it is, right? There are some huge markets out there, right, which you could actually go and get into, and it doesn't matter that you come out of Egypt or Germany or the UK, right? what's your where are you in terms of your growth?
Beyond Egypt.
Beyond Egypt, right? Your growth thought,
No,
or actually even in Egypt, right?
Yeah.
Why would you not white label in Egypt?
So currently, I believe we're able. So I think white labeling can hurt us because there's so much logistics behind. So white labeling limits people to their own client base. Or so again, if a telco wants to white label it, they'll white label it to their existing client base. So it becomes limiting, and then who gets into which slots and so on, and the credit assessment. So there's so much that we need to like blend in, and I think we can just manage it ourselves.
Okay.
We do have corporate partnerships, a B2B2C model where we onboard clients of existing major players, employees of companies and so on, and we offer them a set of benefits that they can, and at the end of the day the margins aren't as attractive compared to a pure lending platform or pure but again, we never believed a heavy balance sheet at times like this could be sustainable, and that's why we chose such a model. And so why we are actually thinking of country expansion. One of the biggest milestones we want to now prove, now that we've done sort of nailed down the product, the tech, the operations, and sooner or later we'll be able to attract enough market share from the total addressable market. Just needs some time. But in parallel, I think it's about time to start proving that this model can be exported and can be replicated across other markets. And we're actually looking today into 2 markets. So hopefully within maximum a year from now, so 6 months.
And you're going to replicate Money Fellows there, or are you looking
there.
Again? Are you planning to white label in those markets?
So basically what we're thinking is replicate Money Fellows there, but we're thinking of doing it with a player, with an existing player, so a bank, a teleco, and so entering a new market, we want shortcuts.
Partnership.
Yeah, we want shortcuts
to you want to reduce your cost
to customers, to regulations, so there's so many benefits that we can get if we would to partner with an existing player with a good track record than if we do it ourselves, especially with a very complex model in a very highly regulated industry and so on. So I think the 2 markets we're looking into are actually we're mostly looking into partnerships. So it's a revenue share model in a way. So it's sort of very similar to a white labeling solution.
Yeah, but it's very so okay. Evan, let me ask a question. And we've only spoken for about 30 minutes, 35 minutes, whatever the time is, right? But I'm very tempted. Is a market like Egypt where if I look at some of the building blocks, right? You've acquired a significant amount of customer base, right? You have a lot of behavioral data on it. You have seen people's lending and lending and borrowing behavior or savings and lending behavior, right? You've understood collections, which is actually quite a complex piece, right? You're now introducing a prepaid product. So obviously you're basically telling people that we're not just going to transfer that money into your bank account, but we're going to give you an instrument through which you can actually use that money to whatever avail. And then again, you're going to collect a lot more interesting data that will allow you to do things with it, right? You're planning to launch something around investments, right? So some sort of an embedded savings or embedded investments product. Are you going to eventually become a digital bank? Is that the path? You might not want to say yes to it, but I actually see that's kind of the natural trajectory, right? Because you want to play with the big boys.
So I think we believe we are a digital bank alternative for emerging markets. So again, because I believe digital banks is an evolution of a very solid banking system with a very high population of banked customers, and they now want to evolve and become better at and offer a better experience without all the branches and so on. In Egypt, they're not banked yet. Yeah, so you can't jump into becoming a digital bank without this middle layer. And I think a ROSCA is a very interesting use case that people relate to. It's very cultural. And for such a segment, instead of offering a digital bank experience, you can actually offer a digital ROSCA experience, which sort of naturally embeds them or includes them into the formal financial system one way or the other. So we believe a digital bank alternative is a better description than a pure digital bank.
Okay, no, I like that answer. I like that, and I accept that answer. There's obviously your thinking, with one caveat, and this is not to challenge you, because if you look at new banks' success in Brazil, right, it's come in a market which was reasonably financially excluded, right? And if I'm not wrong, they've crossed 100 million customers in South America, and maybe now in Brazil itself, because I think they had hit 90 million. But I take your answer. Let me pivot a little bit into a different customer segment and the viability of a similar model to you, right? Micro and small businesses, right? One of the biggest challenges the micro and small businesses have is liquidity and funding gap, right? They also go through times where they have access to cash flow, and so they could be net lenders, right? They go through periods where they are desperately in need, right? In most cases, they're not able to get money out of, I guess, typical traditional sources, so they have to avail of all types of channels and land up paying huge amounts of money. Do you see an opportunity there? Are you already doing something? And I don't mean the employees of these companies. I mean these
offering to the companies itself.
The small companies itself. Do you see these so-called chit funds, if I may use that term, be viable for those segments? And is that something you've explored? Yes, no, maybe not a good idea?
So it's a maybe. I think now we're too focused on the B2C. I think it's very attractive, very big market, and I think the SME part could be, of course, extremely big as well. But I think we're compelled by the difficulty and the challenges we face on a B2C model, which actually makes it very exciting. So I think it's still a very big space to just focus on the B2C market, and there's so much still to be done. And we don't want to defocus. We don't want to keep shifting focus, because in Egypt, talent isn't very easy to get. It's very high. It's very difficult to retain, and so on. So we're not capable, and we don't have enough resources to actually focus on 5 different verticals and so on at the same time. That's the current. So that's why it's a maybe. But I think we're very close to nailing down the B2C component. And I think when country expansion comes to a position where we're also successfully doing that as well, I think this is where we can start focusing on opening new verticals like SME.
I like that answer, because most startup founders usually turn around and say yes to everything. So I'm happy you didn't say yes to it. This was not a test question. It was more of an informative question, because one of my favorite topics that over the last 10 years I've been exploring in various conversations is every 2 months, 3 months, there's this amazing report around how badly the micro and small businesses are being treated. And that never changes, right? It just continues and continues and continues. And regulators try, banks try, but no one really solves the problem. And I think, the problem that you're solving, to me, sounds quite, equally, possibly equally relevant for the SME segment. Cognizant of time, last couple of questions. I go back to competition again, because this is very interesting. There is crowdfunding. There is P2P lending. There is microfinancing, right? All of these seem to be growing quite well, especially in emerging markets in the MENA region. Some markets more easily than other, where the regulation is a little bit clearer, right? You don't see the space getting overcrowded from a customer's perspective, the level of distraction.
So those 3 examples are basically compared to the slot number 1 that we launched as a pure lending component of, and I think there is a big market for that, and we're not really trying to get it more crowded. We're offering a use case that is not relevant to those who are in urgent, immediate need of cash, and I think most of those use case offers that to such a segment. But we offer so much beyond that. We offer slot number 2, number 3, number 4, number 10. And so there's a whole spectrum of services beyond just a pure lending service. But I totally agree that the lending space alone is getting crowded, but I think the need is getting higher.
Need is getting higher.
The market is getting
crowded.
bigger.
I just think it's a very simple thing. it's getting distracting.
Yeah.
Right. And let's be honest, not everybody is as smart as you are. Right. And we're talking about people like me.
Yeah.
Right. And to me, there's just too much choice.
Yeah.
And sometimes too much choice, you land up making not the right decision. Right.
Exactly.
Maybe the ROSCA is the right choice, but I land up going into microfinancing because I just feel it's easier. Because I personally think you're correct that the need for credit is increasing because there's different versions of credit, right?
Exactly.
Some people are addressing liquidity issues, not necessarily funding issues, and we talk a lot about on this show that actually liquidity itself is a problem, right? Which is not the guy or the girl or a company over 12 months is fine. Is that for that momentary issue? Okay, last question, right? You'd mentioned you're obviously entering a couple of new markets. I don't need to know which those markets. I don't even need to know what are in the Middle East or whether they're beyond, right? What are some of the challenges that you're facing entering these new markets from a regulatory perspective? Is it similar to, I guess, Egypt and others where they just don't have an understanding of how this market operates in the, if I may say, in the non-offline world, and so therefore there is resistance to regulate or hasten the process? So what are the challenges that you're facing with this expansion besides finding a partner, et cetera, et cetera?
So I think regulations is one. So
specifically, what in regulation, if I may ask?
So it's a very different model. So you would barely find in any country you go to regulations that you would naturally fit under. So we'd have to either create something unique, and that's the challenge of regulations. So regulations in a for consumer finance, it's there because it's just time. There's a lot of requirements. We need 6 months and certain resources, minimum working capital, and so on. But in our case, we need to educate, what we do and how we do it and what works and what doesn't. And so with our experience with the regulators, that we need to shape something uniquely tailored for us, or partner with someone who would sort of have all of those capabilities and all of those the ability to do almost everything a ROSCA would do, and then sort of shape something alongside with them. And this is what we've actually done in Egypt, where it's more of a bank-led model regulations versus regulations for the company itself. So a big portion of the parameters we comply with is actually the bank's liability to manage escrow to, I don't know. So there's so much that, the central banks would expect from the bank we operate with to sort of protect customers' money and so on. And
right.
Exactly.
Last question. I said that was the last question, but this is definitely the last question. Where are you on your journey? You are. I think you said 2018 you launched.
Exactly.
So you've been 6 years into your journey. You are currently in Egypt. You're looking to enter a couple of more markets. You're completely private. How many rounds have you raised already? Is that public information?
Yeah. So we're at a growth stage. I think we've reached a point where we're actually now profitable. So this is a good sign generally that economics is healthy. You're growing at a certain pace and so on. So I think we're at a phase where we're now looking to start our Series C round. And the Series C round is mainly focused on expanding geographically, while Egypt is now, what we've been focusing on is really allowing Egypt to grow and self-sustain without having to invest significantly anymore. In parallel, all of our focus when it comes to fundraising, I think, should go towards nailing down another country or two.
Ahmed, thanks for coming in.
Thank you.
I wish you the very best. I'm sure our paths will now cross more often that we've gotten to know each other. It's fascinating what you're doing, and I think this is a great example that you don't need to reinvent the wheel to be innovative, right? And I think what you've done is taken, X 100-year-old, 2 century, 3 century-old concept. You brought it into the digital world. In my view, you've financially included a very large segment of the world. There's education involved in it. So I wish you the very best, and hopefully you're able to navigate the regulatory challenges of the new markets and so on and so
Thanks,
forth.
Arjun. Really enjoyed our talk, and look forward to seeing you again.
Thank you. Thank you. So, ladies and gentlemen, that was Ahmed Wadi, who is the founder and CEO of Money Fellows, which is obviously headquartered, if I'm not wrong, out of Egypt, or at least Egypt is their biggest market, although they did launch in the UK first. So, with that, I'd like to say goodbye, and I'll see you next week. Bye bye.